Speaking of IEX, let's straight away get to Nikhil Nigania now to understand what this implies for the company. Nikhil, I was just going through your note briefly, and your title is interesting, As Bad as It Gets. And the thing is, the market wasn't prepared, I think the market kind of, because this was going on for so many months and quarters, the market kind of put it on the back burner. Let's get to the hit first. 46% of IEX's volumes are coming in from the day-ahead market. Now, what's the hit in terms of your own estimates, earnings, etc.?
Sure. See, the impact we think will be twofold. Number one, the impact will be on loss of market share. So on the day-ahead market, as you rightly said, about 45-46% volume for IEX's day-ahead market. Where if you look at global peers, in UK, we saw coupling impact the largest player losing market share from 80% to 60% post-coupling. In India also, in our estimates, what we are building in, we are cutting IEX market share in the day-ahead market from 100% to 60%, but that's over a period of 3-4 years. And second impact, which I think will be equally big, is transaction charge. Now with coupling, we think the only thing exchanges will have to compete against other is transaction charge. And they will start giving discounts to larger players, larger buyers or sellers on the exchange, which could bring the transaction charge down from 4 paisa to 3 paisa or even lower possibly over time. So combining these two, we have cut our target for the company from 160 to 122, given the impact of loss in market share and transaction charge reduction.
Nikhil, the very sort of fundamental reason for why the exchange is there, that's kind of gone, right?
You're absolutely right. I mean, the exchange, the moat they have is liquidity. To put simply what it does, if I take a stock market parlance, what it means is, for example, if you place a buy bid on Bombay Stock Exchange, that could be netted against a sell bid on National Stock Exchange. So the liquidity advantage is gone. It's a similar play in power. So whichever exchange you're putting your bid on, buy or sell, there'll be one common demand-supply book that will happen post-implementation of this.
So, you since you cover it, does it have a lot of institutional holding, yeah, just trying to understand how's the who are the players long only, and what will their behavior be? I mean, over a period of time.
Sure. See, as per the government regulation, no single entity can own more than 25% of a power exchange. So it has multiple shareholders, mostly institutional shareholders, which are long only mutual funds, mostly domestic funds, and decent bit of retail shareholding as well. Other than them, I think it had become a favorite among hedge funds looking to play it for the volume or this big event, given it moves a lot and it's in futures and options. So yeah, it's very relevant from an institutional shareholder perspective, the stock. It's a good company.
Yeah, go on.
No, so I was saying it's a good company, but the regulatory overhang is massive. And this was possibly the most negative event that could have happened for the company.
Yeah, that happens in some of the older economy sectors, and power is one of them, right? Regulations can change, even oil and gas for that matter. Just recapping, what you're saying is that the market share will reduce from obviously near 100% right now to about 60% in the day-ahead market over next 2-3 years. Now, this is the first order impact, right? Because what the order says that they'll see how it goes with the day-ahead market, and then they'll roll it out to the real-time market, the RTM market, and then the term-ahead market as well. So then what happens if we talk about coupling to become a reality for all segments?
No, you're absolutely right. Even in our base estimate, we had not built in all 3 products getting impacted. But the way the order reads, all these 3 items are starting with the day-ahead market, the biggest one, and the second biggest one, RTM. That could also get impacted 6 months to 1 year after the day-ahead market is streamlined. Coupling of day-ahead is streamlined.
Okay, so, what's the advice? I don't know. I mean, this is such a big structural blow. The company loses its moat, monopoly, call it what you want. So I don't know if there's a way out. I mean, is the stock, you mentioned you've lowered your price target. Is it a sell, buy, hold for you? What's the advice to investors?
See, we had been a sell on the stock for the last 3.5 years. We changed our rating to market weight given good volumes it is seeing. So volumes, for example, on IEX is up 15% in the first quarter of this financial year. So volumes we think will still be good, but this event, it's massive. So hence our fair estimation of value of the stock is 122 is what our new target price is.
Yeah, no, absolutely. Nikhil, we'll leave it there. Quick conversation. Thank you very much for joining us here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back with Dr. Reddy's to discuss their first quarter numbers. And we also have Sumit Gupta of Centrum to talk to us about pharma and, of course, a bit about Dr. Reddy as a stock as well. Stay tuned.